Sure, we are going to kick off this morning with quite a bang. Sir, may I ask you to join us? Good morning. A round of applause, everyone. Thank you.
Morning, all. I think it's a very quick introduction I just wanted to give. It's a thematic review. I'm not going to talk at length on challenges and opportunities in Africa. I'll probably start with what we see as the macro level factors that encourage optimism as well as uncertainty in Africa. Next slide, please. You can see the GDP growth projections. Sub-Saharan Africa grew at 4% in 2021, expected to grow at 3.6% in 2022, and 3.9% in 2023, and 4.2% in 2024. It's one of these fortunate countries to have a young population with a median age of 20 years, but at the same time, most of the countries in Africa are debt-ridden, huge debt compared to their GDP levels. But they are also rich in natural resources, diamonds, gold, oil, natural gas, and what you name it. There has been fast technological upgradation in the continent, not only among consumers, but also in the various companies that you see operating within Africa. The changing consumer habits, especially post-COVID-19, and the falling data costs, and the ongoing government efforts to improve governance and institution building to bring in resiliency has been noteworthy. Climate change is another challenge, even though Africa contributes very little to climate change risks, but yet it is ravaged by climate change problems. It requires average of $1.4 trillion over next 10 years. Few graphics I just wanted to show you. Just a quick glance over those charts. Next slide, please. I won't talk about it, just basically a few countries I picked up for annual GDP growth. Quickly, next one, please. High level of inflation, 32% in Ghana. Debt ratios you can see is macroeconomic data, what's happening to the bond prices and bond yields. It's seeping through into the capital position of the banks, also those who are holding bonds in this volatile market today. It's not only adding to profit, yes, fine, but it is also seeping into the capital in terms of revaluations. None of the countries are investment grade. So, what do we see as opportunities? And definitely there is an opportunity in payment, both domestic and cross-border. Africa has led innovations in the past, M-Pesa for example. Only 5 to 7% of total payment transactions are through digital channels today, despite COVID. So that means there is huge potential for payments on digital basis. E-payments is gaining momentum. A study by McKinsey last year expects that there will be around 20% annual revenue growth in domestic payments market itself. There's uneven growth across continent, but you see Egypt, Ghana, Kenya, Nigeria, and South Africa have managed transition to digital mostly during COVID 2020. So there is a favorable economic growth. Probably Africa is growing at higher levels than most of the developed countries today. There is a faster technology adoption. There's advances in payment infrastructure and demographics, and also diaspora remittances, which is a key factor. I think, if I remember correctly, Nigeria, the remittances were about $25 billion a few years ago. new and innovative technologies and business models are enabling easier consumer and merchant transactions. You see QR codes, quick response services in Ghana, and new quick response in Nigeria. These are some of the initiatives taken by the governments there. Real-time payment infrastructure is being built, has really been successful in some countries. There is also this Pan-African payment and settlement system, which is being initiated with the Africa Continental Free Trade Area. Once it happens, probably there'll be seamless transactions within the continent, and that will augur well for the countries there. Banking opportunities. There's a huge opportunity in this continent. About 57% of adults in this continent are financially excluded. That's about 350 odd millions completely financially excluded. But at the same time, what we have seen is smart phone explosion, mobile money explosion in this country. So there is an integration between banks, fintech firms, and other infrastructure agencies, and you find that all are coming into play to make sure that digital becomes a reality in this continent. Credit penetration has been very poor in these countries. There are still opportunities for easier access to credit, and that's where banks can play a greater role. SME and merchant service, similarly, is still, there is scope. One good thing about this country, especially I have seen one country where my parent is established, high interest margins is averaging around 7%. I mean, that's probably one of the highest margins one would see in anywhere in the developed world. Cost to income ratio has been coming down somehow, but yet got ravaged by the inflation. Home working has really helped these banks to reduce their cost to income ratios. There is a huge financial gap in climate change initiatives. There is a requirement of 2.5 trillion finance between 2020 and 2030. Is an average yearly of USD 200 billion. And of course, it cannot be financed by public companies or government alone. It needs private initiatives and private contributions. Infrastructure finance is another opportunity. I think 2019 and 20, averaging around 80 billion were invested in infrastructure. There is a requirement of close to 100 billion infrastructure funding requirements every year almost, and government contributions have been around 30% and private contributions just about 20%. So these are huge opportunities for banks and other private investors. Challenges is an unstable macroeconomic environment. You have seen those charts. Rising interest rates. There's inflation, which is really affecting the cost. Strengthening of US dollar is another big challenge for the continent, which is fragile in terms of dollar and other strong currencies. Bond price volatility, we have seen how it is affecting the market there. Forex reserves have not been really worth that much. I think you would see on the average about 5 to 6 months coverage of imports. There are competition within the market. Telcos are competing with banks on payment space. Fintechs are coming up. They are challenging the established banks. Other intermediaries also coming up, which are really being used by some of the banks. I have seen them using to make sure that they retain their customers. Capital has been a big challenge for most of those countries. You can see in the chart, probably South Africa is mostly, I wouldn't say well capitalized, but is capitalized anyway. I think there's a strong capital there, but other countries don't have much capital. So banks are really, really struggling to get the right amount of capital. So that means there is a scope for growth. Government policies at times encourages, at times discourages because of instability, intransigency, and changes in policies often. Yes, asset quality deterioration has been a challenge over the last couple of years, especially with pandemic and oil price movements and other things, but there are also domestic economic pressures. You find there are activist regulators often using banks to compensate for fiscal discipline or structural deficiencies. You would see that some of the countries, central banks have imposed a high CRR, is up to 32.5% in Nigeria. On the top of it, you have a CRR debit coming up that almost takes out 40% of the total CRR of those banks. That's a huge loss for those banks because they're at zero cost. And if you compare another country, probably Ghana is 8% and 2.5% you find in South Africa. So there's a disparity there. So I think I will rest my talk here. The bell has already rung. 5 minutes, so I'll leave for some questions in case, please. Yes, please. Yes, please.
So, good morning. My name is Antti Uros from FinFund. Thanks for a very interesting presentation. How do you see the Tier 1 capital requirements, going forward? Very interesting slide here.
Yeah, some of the banks are doing domestic raising only. They are not going international because of the costs. I have seen some banks have gone there just to raise domestic capital. And domestic capital doesn't give them the strength. Maybe they will be able to do business domestically, but they will not be able to do any international transactions because their capital strength will not be that much stronger. So that's a challenge in Africa now. I haven't seen many coming onto the international market for raising capital of late. Yes, please.
Thank you. Good morning. My name is Dr. Chinyere Almona. From the Lagos Chamber of Commerce and Industry. So you mentioned the large number of people that are unbanked and the importance of fintech technology in reaching those people. But considering perhaps the level of digital infrastructure, technology infrastructure across most of the African countries, how will a bank typically bridge that gap?
Can you come again? I think I couldn't get the last one. You said, how would you?
Yeah, how will a bank bridge the gap? So you have a large population of people that are unbanked, and we need to get to them through technology.
Yeah, I think that is a challenge. I think I have seen entrepreneurial banks really investing into technology and making sure that technology plays a part of their strategy. I have seen quite a few banks in Africa adopting technology at a faster pace and making sure that the customers try to change their habits to go into digital. Yes, penetration-wise, you would say that internet is not there, it's not stable, electricity challenge. But despite all these things, fintechs are flourishing in those countries. In fact, I myself am involved in one fintech project that we are working on right now. So I know what are the challenges, but yet I'm also sure that we'll overcome those challenges. We know exactly that what can be done and what cannot be done.
Ladies and gentlemen, any further questions? Yes, ma'am.
I have another question. So the last point there is brain drain. So talents live in Africa. How can banks who want to invest or do more in Africa attract or bring back talents living? What can you do to keep them?
Yeah, that's a big challenge. In fact, what's really happening is in these countries, because of the accessibility through internet and other things, people are being recruited. Is what I will not call a body shopping, but definitely something like that, where people sitting in Africa can work for Microsofts and Googles of this world, and they get paid salaries which are completely different levels than what is being paid locally. And that's been a big challenge. That's been definitely a big challenge, and banks' costs will go up if this happens, and losing talent is also possible, and we have seen that happening. Thank you.
Thank you very much for your time this morning, sir. Ladies and gentlemen, please remember that all our speakers are on the application. If you have any further questions or if you would like to